Markets are closed today to celebrate the birthday of Dr. Martin Luther King Jr. But we are open for business here on the Fox Business Network. Take a look at the futures. They are pointing to a lower open this morning, 122-point loss on the Dow futures as the government enters day 31 of the shutdown. Joining me now, Crossmark Global Investments Chief Market Strategist, Victoria Fernandez. Victoria, what do investors need to see? Because even in the midst of this shutdown, we have had a rally in the markets to start the new year 4 weeks in a row. What are investors watching?
I think we're really watching earnings at this point in time. You know, at the end of last year, sentiment was really driving the volatility that we saw in the markets. People were very concerned about what the Fed was going to do. Most of the movement was headline driven. And I think now we've shifted last week as the banks really kicked off earnings. We've shifted to really focus on some more of the fundamentals, and that's why we've seen the markets improve a little bit. But now that we have more headline news coming out of Washington, when the markets reopen tomorrow, I think we may have some more headline-driven movement. That's why we're seeing futures down a little bit.
Mitch, in terms of the earnings, bank stocks last week posted their strongest 5-day gains in more than 2 years. The KBW NASDAQ Bank Index was up almost 8%, 7.7%. So there was good news. Even with some of the reports were mixed, some earnings per share misses like on JP Morgan. But Mitch, talk about that. Is that hopes for a better earnings season overall?
I think so. And you could look at what's interesting is the market looked at all that and parsed out the good news and didn't dwell on the bad news. And which
was a complete flip from what we were seeing in the whole end of the year.
The whole last quarter was let's find any piece of bad news and sell into it. And we have the regional banks reporting mostly this week. And that's really closer to where the job creation is in this country. So if it looks like the regional banks are adding to their loan book and they're strong, it may be a good sign that money's going into small business, which is the real job creator.
I actually think we are going to hear some good news from them, because if you looked at Bank of America's results, you know, one of their biggest things that moved the needle positively was lending to all of us. It was the credit business. It was the debit business. So we should actually hear some good news if that's any indication.
And we got good news from the Federal Reserve. The Federal Reserve saying we will be patient over and over and over again, whether it was short-term interest rate increases, but also looking at the balance sheet reduction, aware of the market's concerns about that. And Maria, on Friday, on Maria Bartiromo's Wall Street, spoke to Dick Beauvais from Rafferty Capital Markets about the Fed's decision to keep interest rates steady.
You think the Fed caves to the president, don't you?
Oh, I don't think there's any question about it. I think that one by one, these guys have swung, recognizing that the Fed can't take that type of negative publicity on a constant basis from someone of that stature. They just can't take it. So they caved.
Victoria, maybe the Federal Reserve caved to the markets. We're in complete disarray. The credit markets were messy. People were having very hard trouble even buying and selling and pricing higher grade debt. There was no high yield debt issuance in the month of December. So, and again, there was massive volatility in every corner of the financial markets. So what do you think the Fed does? Is the Fed on hold? Have they placated the markets enough for the next 3 months?
You know, I'm not sure that I would say the Fed actually caved to the president. I do think all along the Fed has been saying that they were going to be data dependent. They just saw the data as much more positive than I think the market did. And what they have done over the past month is Powell has come out and really kind of taken the patient word that you were talking about. They're going to take a little bit of time. So maybe they're on hold for a little bit, but we still anticipate that with the strong consumer that we're seeing, if earnings continue the way they are, if we get this GDP growth and, you know, around a 2.5%, then I think we're going to see them continue to raise, maybe once in the first half of this year and maybe a second time in the second half of the year. So I don't think they're done with this hiking cycle, but I definitely think we're going to see a pause before they make another move.
So, Victoria, I have a question for you. Today's day 31. Tomorrow will be day 32 of this shutdown. At what point does this shutdown start to truly impact the market and truly impact how folks make their trading decisions?
You know, if you look at estimates right now, The direct effects, missing their paychecks is about 0.3% annualized on GDP. The indirect effects are about the same, indirects being contractors and things like that, as well as the market missing some of the economic reporting. And that's where I think you're going to see the uncertainty come back into the market. If we're not getting retail sales numbers, if we're not getting housing numbers, it's hard for investors to then project out what they think the market's going to do going forward and invest accordingly. So that's where I think it's going to get hit the most. You're looking, if shutdown goes through the first quarter, about a 1% hit to GDP annualized. So hopefully we get something this week to kind of take some of that uncertainty off the table.
And maybe some of the CEOs coming out and hammering all these lawmakers and these politicians about them not working and not getting a deal done, rather than stepping back and trying to make nice with the folks in Washington. Come out and start hammering them in those earnings calls. We shall see. Victoria, thank you so much. Good to see you.
Thanks, Dagan.
Victoria Fernandez.